Welcome back to the Deep Dive. Today, we're doing something a little bit different.
Yeah.
Instead of a single news story, we've got these foundational texts. It's basically a syllabus for how modern business works.
It sounds a bit dry, I know, but what we found is that it's actually a perfect shortcut. It just cuts through all the noise.
Right.
It lays out the core systems, the things that define business today, from ancient trade all the way to global tax and digital platforms.
So our mission, really, is to turn that syllabus into something you can actually use.
Exactly. High impact knowledge right now.
Okay, let's unpack this.
Yeah.
And I think we have to start right at the beginning, the deep history of trade.
Mm-hmm.
Because when you look at the roots of global commerce, the Indian subcontinent wasn't just, playing a part. It was a central economic engine.
It was. And a lot of that came down to geography, a kind of strategic positioning.
You mean the Himalayas and the oceans?
Precisely. You have this almost impenetrable wall in the north, the Himalayas. That's protection. But it also has these crucial access points linking up to the Silk Road.
And then to the south.
To the south, you have this massive peninsula giving you access to the entire Indian Ocean. I mean, that's your maritime superhighway, your spice routes. The geography didn't just support trade, it basically dictated it.
And that much trade, especially on an international scale, you need a pretty sophisticated financial system to back it up.
Of course.
The sources here point to a huge acceleration once metallic money became standard.
Yeah, because it's durable, it's divisible, it just works. But the real genius, the real innovation, was in the banking system that grew up around it.
Indigenous banking system.
Right, long before we had anything like a modern bank. These were powerful lending families, CEFs, they were called, and they were underwriting everything. Domestic trade and, crucially, foreign trade.
Because you can't just load a ship with gold and send it across the ocean.
You can't. It's too risky. You need instruments. You need a way to transfer value without moving the physical metal.
And that's where the hundi comes in, which I find so fascinating. It feels so modern.
It really is. Think of the hundi as the earliest version of a bill of exchange. It's an unconditional contract, a promise to pay.
And it's transferable.
That's the key. It's transferable, negotiable.
Mm-hmm.
So you aren't delivering a bag of silver across the country. You're delivering a piece of paper that guarantees payment somewhere else, maybe months down the line.
Yeah.
It was, a revolution for managing money.
Which makes perfect sense when you think about the risk,
Yeah.
the terrifying risk involved in those journeys.
Oh, the risk was immense. We're talking months at sea, a single storm, a pirate attack, and your entire investment is just gone.
So the interest rates.
Had to be incredibly high.
Yeah.
Especially for those long foreign voyages, the rates just reflected the very real chance of a total loss.
And to manage that, you started to see specialization.
You did. You saw the rise of intermediaries.
Like commission agents, brokers.
Exactly. People who step in to provide a layer of financial security. They almost act like early insurance, for the producers.
And this specialization even created these distinct trade communities based on geography.
It did. You had the Punjabi and Multani merchants really focused on the northern routes.
Right. And the sources mention the Bhatts in Gujarat and Rajasthan.
And the Mahajan and Chattis who were dominating the ports in the west and the south. Each group had its own specialty, its own network.
And we're not just talking about local goods. This was global economic power. The exports were things like fine cotton.
And pepper. Don't forget pepper. The Romans called it black gold.
Black gold. That says it all.
And all that export money, that's what financed the imports. Chinese silk and huge amounts of gold and silver to keep the whole economic engine turning.
So we have this incredible ancient commercial machine. High risk, high reward. But, okay, let's transition. To understand business today, the material gives us a formal classification. What even is a business?
It's a good question. And it's important to separate the three main types of economic activity. So first, you have business.
Okay.
And that is fundamentally defined by its objective, which is the production or sale of goods and services for the primary motive of profit. It's about wealth creation.
And you contrast that with a profession.
Right. A profession requires specialized knowledge. Think of a doctor, a lawyer. Their main motive is providing a service. And they're regulated by a professional body to maintain standards.
Okay, so business is profit, profession is service. What's the third?
Employment, which is just, working for someone else for a wage or a salary. You're part of their business.
Got it. So if we focus just on the business activity, that itself breaks down into industry and commerce.
It does. And industry is pretty straightforward. It's the production side of things, the actual creation or extraction of goods.
And that has tiers, right? Primary, secondary.
Exactly. Primary is extractive, so mining, farming, or genetic, like a poultry farm. Secondary industry then takes those raw materials and converts them, manufacturing, construction.
And tertiary.
Tertiary industry is all the support services. Banking, transport. It's the bridge that connects production to the customer. It's the bridge to commerce.
This is the part I really liked. The way the sources define commerce is, well, it's elegant. Its whole purpose is to remove the hindrances in the exchange process.
It's a great framework, a really simple way to think about it.
Yeah.
So imagine you've made a product. The first problem, the first hindrance, is the hindrance of persons.
The gap between you and the buyer.
Right. And that's removed by trade, getting the goods to the market.
Okay, then there's the hindrance of place. My factory is here, my customer is over there.
And that's solved by transport. Simple, but absolutely essential.
Then you have the hindrance of time. Maybe you make something in the summer, but people buy it in the winter.
And that's why we have warehousing. It holds the stock, it stabilizes the supply chain.
But if you're holding all that stock, you have another problem.
Yeah.
The hindrance of risk. Fire, theft.
Which is removed by insurance, spreading that potential loss out.
And of course, none of this happens without cash flow. The hindrance of finance.
Solved by banking. It provides the capital, the payment systems, everything.
And last, you have the hindrance of information. People can't buy what they don't know about.
And that is removed by advertising. It's this whole beautiful system designed to make exchange as frictionless as possible.
But even with all of that,
Yeah,
there's always risk.
always. Business risk is just, the possibility of not making enough profit or even making a loss because of things you can't control. A market crash, a new regulation.
And managing that risk is why the choice of your company's structure is so important.
It's one of the first big decisions you make.
If you're just starting out, the simple choice is a sole proprietorship.
Yeah, because it's so easy to set up and, to shut down if you need to. The barrier to entry is almost zero.
But the trade-off is huge. Unlimited liability.
It is. It means if the business goes under, they can come after your personal assets, your house, your car, your savings. It's a massive risk.
And the opposite of that really is the company.
Much more complex to form, a lot more regulation. But you get two huge advantages.
Limited liability.
That's the big one. Your personal assets are safe. And you also get perpetual succession. The company is its own legal entity. It exists even if the founders leave or pass away. It gives you stability.
Okay, so we have these foundational structures. But things are changing so fast now. The digital shift has completely reshaped what a company even looks like.
It's staggering.
And this is where it gets really interesting. The digital payment landscape. The move to e-business.
It's all about e-commerce now, which is just, buying and selling goods and services over computer networks.
The sources break down the different types of transactions. There's B2C, business to consumer, which we all use.
Right. But the surprising thing is that B2B, business-to-business transactions actually have the highest dollar volume. Companies selling to other companies, that's where the really big money is moving online.
Then there's C2C, consumer to consumer.
I mean, eBay.
And C2B, which is fascinating. Consumer to business. It flips the whole model on its head. The consumer states their need, and businesses bid for the job.
All of this, though, it relies on instant, secure payment systems. And the sources make a really important distinction between platforms like BHIM and, say, a mobile wallet.
Yeah, let's clarify that. They seem like the same thing, but they're not.
Not at all. BHIM, which uses the UPI framework, is a direct transfer of money between bank accounts. It's an account-to-account system.
Whereas a mobile wallet actually holds the money.
Exactly. It's a digital container for your money. You load it from your bank account or a card, but the money is then stored within that app's ecosystem. They're both moving us toward a cashless society, but the mechanics are totally different.
And this digital shift isn't just about payments. It's about labor, about expertise. It's about the evolution of outsourcing from BPO to KPO.
Right. BPO, business process outsourcing, that's about process. It's about efficiency. Think customer service call centers or basic admin tasks. The goal is doing routine work faster and cheaper.
KPO is different. Knowledge process outsourcing.
It's a huge step up the value chain. KPO is about specialized knowledge. The employees are domain experts. They have advanced degrees. They're doing legal research, complex data analytics, high-value stuff.
So it's a move from arbitraging labor costs to arbitraging intellectual capital.
That's a great way to put it. It completely changes the game for the global talent pool.
Okay, so we've gone from ancient paper IOUs to these high-value digital knowledge firms. Now we need to zoom out, look at the rules of the road, the global and domestic regulations that govern everything.
Yeah, the macro context. International business is driven by a simple idea: access production advantages.
Cheaper materials, specialized skills, new markets.
All of it. And for a country, that means earning foreign exchange, using resources better, and just, raising the standard of living.
And domestically, the sources really zero in on the goods and services tax, GST, which was a massive deal in India back in 2017.
It was a revolution, really. The goal was one nation and one tax. It got rid of this confusing mess of, I think, 17 different indirect taxes.
And the key mechanism is that it's a destination-based consumption tax.
Yeah.
What does that actually mean for a business? How does it stop that cascading effect?
So the cascading effect was the old problem of tax on tax. A manufacturer pays tax on materials, then a distributor pays tax on that price, which already includes a tax.
So the final customer is paying tax on a tax.
Several times over. GST fixes that with the input credit mechanism. So when a business pays GST on its inputs, its raw materials, it gets that amount back as a credit. It only pays the final tax on the value it adds. The tax is only paid once at the very end by the consumer.
That protects the flow of goods. But what about protecting ideas?
Yeah.
The culture behind the goods.
That's intellectual property rights, IPR. And it's essential if you want to encourage innovation.
These are aligned with global standards, right? The WTO's TRIPS agreement.
Yes, and that leads to national laws like the Patents Act. But a really interesting part of this is geographical indication, or GI.
Like Darjeeling tea or champagne.
Exactly. It's a protection for products that can only come from one specific place because that place gives them a unique quality.
And its impact is more than just a fancy label.
Oh, much more. It stops counterfeiting. It means someone can't just grow tea somewhere else and call it Darjeeling. That protects the premium price, which directly supports rural incomes in that region. It drives tourism. It connects global trade right back to local identity.
And the body that oversees all of this is the World Trade Organization, the WTO.
It's the permanent global rulemaking body for trade. And while its core mission is, expanding trade and raising living standards, the sources are clear about a broader objective: ensuring the optimal use of the world's resources and, crucially, promoting sustainable development. The global trade machine is now officially supposed to be thinking about its long-term impact.
So what does this all mean?
It means that business is it's one single interconnected system. It's driven by profit, yes, but it completely depends on these sophisticated support services, banking, insurance, logistics that we've been building and refining for thousands of years.
From a Hyundai on a spice route to a BHI transaction on a smartphone?
It's all about reducing friction and managing risk. And that whole system is structured by legal forms to handle liability and governed by huge regulatory reforms like GST and global standards from the WTO. It is complex and it is always, always evolving.
Right. And the documents are clear that while profit is the primary objective, it's not the only one. Enterprises have social responsibilities to their owners, employees, customers, the whole community.
Absolutely. It's a mandatory part of the conversation now.
So here's the thought. Given this entire system, built over centuries to manage risk and pursue profit, does the modern pressure for businesses to embrace ethical and social responsibility fundamentally change what success even means? That's the challenge for every entrepreneur out there today.